Okay, so what a day in the market. We saw this massive split, right? A really clear story of a tech giant making a huge, expensive bet on AI that totally paid off, while a brand you'd think would be stable, a consumer brand, just got absolutely annihilated.
All right, first up, let's dive into the day's big winner. And this really points to the most powerful theme out there right now, which is, you guessed it, AI infrastructure.
Wow, just look at that number, over 5.5%. For a company of this scale, that's not just a small bump, that is a massive, massive move. And we are, of course, talking about Amazon. It just surged, closing at 233.65. I mean, this was basically the engine that pulled the whole mega cap tech sector up with it today. But the big question is, why?
So here's the real story, the why behind the surge. Wall Street is basically giving Amazon a huge thumbs up for taking control of its own destiny here, right? They're building their own custom in-house AI silicon. Now think about what that does. It means they don't have to rely so much on expensive chips from players like NVIDIA. They get to control their own infrastructure, their own costs. The message from the market is crystal clear. In this AI arms race, the biggest bets are going on the companies that own the whole stack, from the ground up. Okay, now let's switch gears to our next winner. And this one, well, it's a bit of a comeback story that I think caught a lot of people off guard. And check this out, an even bigger pop. We're talking over 8%. This wasn't some slow and steady climb either. This was an absolute explosion to the upside. The stock? BlackBerry. Yeah, BlackBerry, closing at $3.82. And let's be super clear about something. This was not some meme stock rally driven by retail traders. No way. This was a legitimate breakout on some serious, heavy institutional volume.
And here's the proof in the pudding. This spike from BlackBerry, it was no accident. It was all driven by solid business fundamentals. They actually delivered a real earnings beat, and it was powered by some insane growth in their QNX software division. You know, QNX is the software that's basically the brains behind the advanced driver assistance systems in all these new cars. So what this tells us is that BlackBerry is finally proving that their big pivot, moving away from phones and into this critical software space, is actually working. It's hitting the bottom line.
All right, so we've seen the winners. Now let's look at the other side of the coin, where things went south fast. Oof, that is just a brutal number. Down over 18% in one day. I mean, that kind of drop just vaporizes months and months of gains. Just gone. So, who took the hit? It was the Simply Good Foods Company, ticker SMPL. It absolutely crashed down to 1180. And this was just relentless selling from the big players, the institutions, all day long. So, why did it get hammered so hard? Well, it kicked off with some really disappointing results, for sure. But the real nail in the coffin? It was when their own management came out and flat out called their performance unsatisfactory. Whoa. For an investor, hearing that kind of admission about their main brands, Quest and Atkins, that's a massive red flag. It's basically a signal to get out, and they did. Okay, so let's pull all this together. This is the fun part. Here is exactly what you need to say at the office tomorrow to sound like you have the market completely dialed in. So, when someone brings up Amazon, here's your take. Amazon jumping 5.6% today is a massive signal. It proves that the mega caps who can build their own data center silicon are the ones who will ultimately control their capex destinies. And for that surprise move from BlackBerry, you hit them with this. BlackBerry jumping over 8% wasn't a retail short squeeze. It was driven by actual earnings and massive growth in their QNX division. The market is finally starting to respect their transition from a hardware relic to a legitimate software utility. And finally, to explain that crazy collapse in the food sector, here's the insight. Did you see the absolute bloodbath in Simply Good Foods? When management has to publicly call the performance unsatisfactory, it shows that consumer wallets are heavily strained. Even defensive consumer packaged goods aren't immune. BlackBerry surged over 8% today on a solid earnings beat driven by their automotive and cybersecurity software. Are you buying the turnaround story in legacy tech names? Or are you keeping your capital strictly in the mega caps?
Comment below. Subscribe to Market Fluency for your daily edge.